Hello everyone, welcome to a new video. Today I will be analyzing the company of ONON Holdings, which is more commonly known as simply ON or ON Running, and it is a premium sports brand for footwear mostly, although they also now have other categories. And if everything goes as planned, it should be going public this upcoming September 14th, 2021 in the New York Stock Exchange under the ticker symbol ONON. As always, my aim with this video will be to analyze several different aspects of the company, or at least the most important ones, based on the SEC filing, which is public. If you want to check it out, the link to it is down below in the description. And afterwards, if you find the video interesting, if you like the company, you can go ahead and do your own due diligence, which you should always do anyways. Nevertheless, before I go and jump into the video, let me quickly give you a short overview of the main topics that I will be covering today. Firstly, we'll start with a general introduction to the business and also some general metrics. Afterwards, we'll look into the industry and also the competitors briefly, followed by the financials, and we will compare this with two other competitors, which it will be under Armour and Deckers Outdoors. Afterwards, we'll go into the IPO price and valuation, and we will compare the valuation of ON to those of the two competitors that I just mentioned. And finally, as always, I will be giving my personal opinion on the company and my future plans with it. With that said though, and after I remind you that if you enjoyed the video, it would be super awesome if you could give it a like, because these videos really take a lot of time to make. And also please consider subscribing if you want to see more IPO related videos. But with that said, let's go for it. ON Holdings is a premium sports brand that is mostly focused on footwear. Although now they have diversified also into other segments, initially they started selling just shoes, very premium ones and of high quality, which of course are not cheap at all. The company itself was founded in 2010 in Zurich, and one of its founders was Oliver Bernhard, who was 3 times world champion and 6 times Ironman champion. And what he was trying to do was to create a shoe himself that would give him the perfect running sensation when he was running in his competitions. Nowadays, ON sells its products in more than 60 different countries all over the world, and it is also present in more than 8,100 different distribution retail stores. And talking about distribution, actually in 2020, 62.3% of the net sales were sold through wholesale and 37.7% through direct to consumer, which is mostly their own website, but it also includes 1 physical store in New York and 4 different stores in China. And then when comparing this to the data from 2019, we see a positive trend, which is that their direct-to-consumer share of the total sales has increased from 24.9% to 37.7%, and that is good because usually when selling direct-to-consumer, you have higher margins than when doing wholesale. Geographically, the brand's largest markets are Europe and North America with 44.10% and 48.9% of the total sales respectively. Asia and rest of the world only represent a very small portion of the total sales, and actually this is where a lot of its growth ahead might still be. Regarding the products that they sell, these are mostly shoes, as I already advanced, with 95.55% of the total sales in 2020 being from this category. And first they started just with running shoes, and now they have diversified into other segments. And something that shows this is that, for instance, in 2019, Roger Federer, which is a super famous tennis player, I'm sure that most probably you know who he is, he joined the company as investor and co-entrepreneur, and he helped the brand basically move also into the category of shoes, but for tennis. The brand seems to have pretty good satisfaction levels with a Net Promoter Score, which basically measures satisfaction of 66 out of 100. When I first saw it, I did not think that it was that good, but apparently, according to the SEC filing, they say that it is amongst the highest when comparing it to its main competitors. So again, that's a good thing. And also, more than 75% of its customers would recommend the brand to a friend. Focusing on the operations of the company, although they have in-house teams for research and development and also innovation, the manufacturing of all the products that they sell is outsourced. So they basically work with currently 17 different suppliers. Mostly these are located in Vietnam, although they also have some others in Indonesia, China and Europe. And actually for the second half of this 2021, they will be adding 8 new suppliers, which are located again in Vietnam, Lithuania and Turkey. And the reason they use so many suppliers is, of course, to reduce the risk dependency, because if they were just to use one and then that one decides to stop working with them, it would be catastrophic for the brand. And instead they try to partner with several different ones. And they also do that because they, for instance, send the same product, the exact same one, to be produced in two factories. And this way they create a bit of competition between the two factories to really push each of the different ones to create the product with high quality. And also this helps drive the prices a bit down or keep them down, because there is certain competition between the different suppliers that they have. Moving into the industry, ON estimates that the market opportunity that they have ahead of them, that again this is the whole market, would be of around $300 billion, which corresponds to the global sportswear market. And this is an intersection from the $119 billion sports footwear, which, as we said, is where they currently have a more well-established presence, and the $174 billion sports apparel market. And according to Euromonitor International, the global sports footwear market generated $119 billion of retail sales, as we just said, in 2020, and it's expected to grow at a 9.9% per year through 2025, compared to the 5.3% yearly growth for non-sports footwear, so higher than the general category. And the global sports apparel market generated $174 billion of retail sales in 2020, and is expected to grow at 8.2% per year through 2025, compared to the 7% yearly growth for non-sports apparel. Overall, it is clear that ON operates in a growing market, but also in a very competitive one. Some of its main competitors include brands like Nike, Adidas, Deckers Outdoors, New Balance, Under Armour, amongst many others. For this video though, I will just focus on Under Armour and Deckers Outdoors, because these two are also publicly traded. They are not as big as some of the others, like for instance Nike. And in the case of Deckers Outdoors, they have several different brands, but there is one in particular, which is called Hoka 11, which just focuses on sports footwear, which is precisely directly competing as well with ON Holdings. And then in terms of Under Armour, it is a bit more of an all-round brand, including not just footwear, but also apparel and accessories. And to me, Under Armour is a bit what ON is, I think, trying to become, at least reading through the SEC filing, as they are trying to diversify and not just be in footwear, but also move into apparel, accessories, and so on. Now, before I compare the different brands, let's focus first on the financials just of ON Holdings. And firstly, starting with revenues, we see very nice and consistent growth since 2016, ranging between 60 and 80% year-over-year growth. Also, since it is a Swiss company, the financials are in Swiss francs, which the current equivalence to US dollars is 1 Swiss franc being equivalent to $1.09, so it's almost a 1-to-1 equivalence. On growth, the first months of 2021 have been impressive, with 84% year-over-year growth, but we also need to take into consideration the base effects from the pandemic of last year, which probably affected the sales of the first half of 2020, that of course this new data is comparing it to. And then going into the net incomes, we only have those of the past 2.5 years, and we see that they reported slight losses. Actually, they seem to be at the turning point of becoming profitable, as in the first half of 2021 they already reported almost 4 million Swiss francs in profits. And finally, on the balance sheet, they are well capitalized already before the IPO and have a conservative debt ratio of 57.75%, which is a good one. Now let's compare the financials of ON Holding with those of Under Armour and Deckers Outdoors. And the first thing we see when we look at them is that both of these other companies are much larger in size than ON, making between 5 and 10 times more in revenues. Also note that I converted the numbers of ON to US dollars so that the comparison used the same currency. In terms of growth, ON is growing much faster than the other two, but that is normal also, as it is much smaller in size still. However, we see that while Deckers is growing gradually, Under Armour seems a bit irregular. Actually, they had some problems already in the past, and you can also see this in their stock price. And on profitability, both ON and Under Armour are not profitable, but Deckers is profitable and growing the profits consistently. At this point now, it is time to check the IPO price and valuation, and we will of course compare also this valuation to the two competitors that we just saw right now. At the moment of preparing this video, the IPO price is projected to be between $18 and $20 per share. And then, in terms of shares outstanding, it's a very interesting situation. There are basically two important things to know. The first one is that it's an IPO, so not only the company is issuing more shares, but also some of its already existing shareholders already announced that they are selling some of its shares. This is not something to worry about, at least not for me, because the owners, the founders, are only selling around 25% of their shares of only the Class A, because there are two types, that's the second thing. So as you can see in the graph, it is not a lot that they are selling, and they are still keeping very large percentage of the company ownership. And then the second thing is that after the offering, there will be two types of shares, basically. There will be 274 million Class A shares, which also includes possible conversion, and 345 million Class B shares. However, the equivalence is of that each Class A share is the same as 10 Class B shares. So actually, if you do this conversion, Class B shares basically are worth 10 times less than a Class A share. And this leaves us with essentially 309 million shares outstanding after this offering, which is precisely the number that I will be using for the calculations of the valuation from now onwards. Alright, so now taking the middle point of the IPO price, the amount of shares outstanding, and also the sales for the past year 2020, we have that the company should start trading at a price to sales ratio of 13.83 times sales. This is not super conservative, but I think that more interesting would be to look at the forward price to sales ratio for the full year 2021, since we have already had 6 months, or we have 6 months of data. And to do that, I did not extrapolate the 84% year-over-year growth, because I feel like there might be some base effects here in the first half of this year. So to be more conservative, I assumed a total year-over-year growth of 60% this year, which I think that it's already very feasible, seeing already the growth that it has had during the first 6 months. And doing that, we would have total revenues of the company of around 680 million Swiss francs and a forward price to sales ratio of 8.64 times, which is already more conservative. Now, if we compare the price to sales ratio of ON with the two competitors from earlier, we see that based on the sales of 2020, it is trading substantially more expensive than Deckers Outdoor or Under Armour. It is true that the growth so far of the company has been splendid, but the question is, how much longer can they keep up with this type of growth? In my eyes, if you think that the company can grow at 60% during this year, which it's already on track to achieving that, so that should be no problem, and also at 40% during the next 2 years to come after that, then it shouldn't be that much of a problem. And then of course, after those, even if it grows only at 10% or a bit more than that, it should be fine. And actually, just looking at the forward price to sales ratio that we saw for this year 2021, it is of around 8, which is only double that of Deckers Outdoors, which was the other competitor, which is a brand that is much more well established and that hopefully also doesn't have that much future growth potential when comparing it to ON. So in that sense, I don't think that it's that overvalued, especially with the rapid growth that it is having at the moment. The main risk with sports brands is that the reputation can be damaged very quickly. Like it happened, for instance, to Under Armour a few years ago. And actually, it's also a bit off trend, right? If a brand is trendy and people like it, then the sales will increase a lot, but then of course trends switch, so they also risk a bit on that. And of course there's the other aspect that we already saw, which is that there is a lot of competition. Leaving these aspects aside, what are my plans with it? Will I be investing in its IPO? Personally, I will pass on this one. Firstly, because I just discovered the company now when analyzing the IPO. I had never heard of the brand, and maybe it's because I'm not so much into running, but yeah, I had never heard of it before. So first of all, I would have to do more due diligence to feel more comfortable when investing in the company. And then secondly, it is undoubtable that they have done an amazing job during the past years. The growth has been impressive, consistent, and they seem to be reaching profitability. So all great things. But what I'm more concerned of is, what does the future growth look like? Because I'm a bit concerned that during the past year and a half, people were at home, they were ordering things online because there were no other options, and also a lot of people spend a lot of money on products, on goods, rather than services, because many services were closed, like restaurants or traveling, for instance, and that made people spend a lot of money on that. For that reason, I don't know how much the revenue growth will slow down in the next quarter, so I would rather wait and see how it goes before making a decision. Nevertheless, if you truly believe in the growth of the company and the comments that what we just commented earlier on, I think that it's not so expensive. Finally, before I end the video, I would like to highlight two very important aspects. The first one is regarding growth and the growth opportunity that they have in Asia, which I think it's massive to grow the global overall sales, because I feel like they are maybe already more well established in Europe and America. But Asia currently only represents 6% of the total sales, so they really, if they manage to penetrate there, they have a massive opportunity ahead of them. And then the second one is regarding the expansion into other categories, because part of the growth, yes, they can grow going into other countries or penetrating even more into already existing ones like Asia, but part of their growth strategy also involves expanding more into apparel and accessories, as they are very heavy on footwear. And I find that this is interesting, it's good, but they are a brand that is well known for having focused its efforts and really being experts on producing footwear that is very comfortable to go running and so on. So I don't know how good they will be able to compete in the other categories, because at the moment they really represent almost nothing from the total sales. And there is a lot of competition from a lot of other brands that are very well established, like Under Armour, Nike, Adidas, Puma, and many others. So those are two things that I would also watch out for. Anyways, please remember that everything I share in this video are my opinions, my calculations, which of course could be wrong, and all of data extracted from the SEC filing. My point though is that I'm no financial advisor, and you should always do your own due diligence whenever investing in this or any stock. With that said though, this is the end of the video. What are your thoughts on Holding? Will you be investing in its IPO? Please let me know in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.